welcome back to my channel, the best place to be wherever you are on your wealth journey right now. Today I want to talk about your residential mortgage application. I've already done one video on buy-to-let mortgages, but residential mortgages are very much a different animal, so I thought I'd do a separate video on these because they are something that most of us will come across at some point. Before I go on, I will say that if you're interested in more videos on personal finance, mindset and wealth creation, do subscribe to the channel just underneath this video for plenty more just like this one. And if you hit the bell next to the subscribe button, you'll be notified every time a new video comes out. Okay, so it might be that you've saved up the deposit for your first home, or it might be that you're moving for some reason. So you might be upsizing, downsizing, moving to a different area. In fact, let me know why you're moving, because if you're watching this, you probably are. So drop me a comment underneath, let me know where you're moving to, why you're moving, and how you're getting on with the process. As we all know, moving can be quite stressful as well, especially if you've never done it before or if you haven't done it for a very long time. So I wanted to give you some pointers on your mortgage application process so that things can hopefully run as smoothly as possible for you. Now, one question that I do sometimes get is what actually is a mortgage? And the answer to that is very simply, it's a loan taken out specifically against a property. And to get started with your mortgage, I would definitely recommend that you find yourself a mortgage broker. It's not a good idea to try to organise your mortgage by yourself, because I know a lot of people that have just gone to their high street bank, asked their bank for a mortgage, and the bank has said no because you don't fit their specific criteria. Whereas if you go to a mortgage broker, they can search the whole of the market for you. So it might be your own bank, it might also be plenty of other banks and building societies and mortgage lenders that you've never even heard of before. And the fact is, your high street bank can only offer you their own products and services. They can't offer you the products and services of anybody else, whereas your mortgage broker can search the whole of the market for the best product for you and based on your circumstances. Now, your mortgage broker might be somebody that's been recommended by a friend, it might be the broker that the estate agent has recommended, or it might be a broker that you've used before. Either way, when you first approach your mortgage broker, they will ask you to fill out a big fat document called a fact find. Now, your fact find contains all the information about you that your broker needs to be able to complete a mortgage application for you. So you'll need all sorts of information, including your last 3 years' address history, how much you earn per year, your national insurance number, details of any loans and credit cards that you might have outstanding, plus if you've got other property in the background, what those properties are, a good list of those along with all the mortgage account numbers and everything. So it really is quite a hefty document to fill in. Now, filling this out might seem like a bit of a headache initially, but actually it's a very important step in the process. So the more information you can find for your broker, the better it will be and the more smoothly the process will run. Now, once you've filled out the fact find, the broker then inputs some of that information into their system, which enables them to find the best mortgage product for you. Once they've sourced a few mortgage products, your broker then will send you a few options. So it might be 2 or 3 options that you can then look through and choose the best one for you. Once you and your broker have discussed those products and picked the one that you think is the best for your circumstances, your broker will then go through a process called a decision in principle, or a DIP, D-I-P. Now, I remember on my very first day as a mortgage broker, my boss handed me a file and he said, "This is Mr. Smith's file, he needs to be dipped." And I thought to myself, well, dipped in what, you know? But actually it just means a decision in principle needed to be done with the mortgage lender. Now, the DIP process involves a soft search on your credit file, so it doesn't leave a footprint, but it is a good idea to know exactly what your credit score is before you apply for your mortgage. Once your broker applies for your decision in principle, you'll normally get one of 3 results. You'll get an accept, a decline, or a refer. Now, if your application is accepted, then happy days, your broker can now proceed with your full mortgage application. If it's declined, your broker will explain to you why it's been declined, so they might have to find out from the lender, but they'll tell you why it's been declined, and then they'll also talk to you about the different options. For example, you might go with a different lender perhaps. If the decision in principle is referred, that means that the lender wants a little bit more information about you before they'll actually make a decision as to whether they'll lend to you or not. Once you supply that information, your lender will decide whether or not to accept or decline your decision in principle, and again your broker will guide you through exactly which information they require. Once your decision in principle has been accepted by the lender, your mortgage broker then has to issue with a document called a KFI, a Key Facts Illustration. And the Key Facts Illustration is really important because it basically is like your mortgage offer document. So it looks exactly like your offer will look when it finally comes out in the end. But it's important that you read through this because it has all the main details of your mortgage, including how much your monthly payments are going to be, what your interest rate is, what the term of the mortgage is, if it's a fixed mortgage, how long is it fixed for and what happens afterwards, if it's a tracker mortgage, what rate is it actually tracking and what happens when that finishes. It will also give you information about any early repayment charges that you might have to pay if you want to pay down the mortgage early. It also gives you details about porting your mortgage, which is where if you want to move house again, you can actually take that mortgage and put it onto the new house, so there'll be information about that. And it will also outline any fees that you need to pay with regard to your mortgage. So it'll include things like solicitors' fees, your valuation fee, your broker fees perhaps will be on there, and any product fees that need to be paid to the lender. Once you've had a read through your key facts illustration, your broker will normally ask you to sign something to say that you've read it and that you understand the terms and conditions of it. So do make sure you read it carefully, and if you're not sure about anything, do ask your broker about it. If you're happy with your KFI, your broker will then go through the full mortgage application. And it's at application stage that the lender will then do a full credit search on you. So this one will leave an imprint on your credit file. So that's why it's really important to be completely open and honest with your broker about all the loans that you've got outstanding, all the credit cards, anything like that, because if you miss anything out, the lender will still see it on your credit file anyway, and then they'll come back and query it, which will make the process a bit longer. At application stage, your lender also wants lots of other documents and information about you, including things like proof of ID. So normally that would be a passport or a driving licence. They will probably want proof of address. Normally they'll want two different types of proof of address. So it might be a bank statement or a utility bill. Normally those would be dated within the last 3 months. Or if you used your passport as proof of ID, you could use your driving licence as proof of address because your address is on there. So if you're the sort of person that normally shreds your utility bills, don't do that. Make sure that you keep them safely in a property file or something that you've got at home in your filing cabinet so that they're there when you need them. They'll also often need your last 3 months bank statements as well. Now you can download these, although a lot of lenders prefer you to actually have the hard copy, so you might need to apply to your bank to actually get them to send them to you again if you're like me, if you don't have paper-based statements anymore. If everything's online, you might need to ask them to send you some. At application stage, the lender will also want you to confirm that you can actually afford the mortgage. This is a rule that's been in place for residential and regulated mortgages for the last few years, and what they'll do is they'll provide you with a list of things and you have to tell them how much you spend on everything. So it will include things like your current rent or mortgage, your council tax, any utility bills that you're paying, things like magazine subscriptions, gym membership, and even quite difficult to quantify things like how much you spend on Christmas every year and birthday presents for people. It's all that kind of stuff. So you put all of that down and then the lender can have a good old look and say, can you actually afford this mortgage? And hopefully they'll say, yes, you can. And then they'll be able to finish the application for you. But I just want to give you a heads up about that because they do ask for all kinds of weird and wonderful things like how much you spend on hairdressing and all that kind of stuff. So just watch out for that. Now, once you've sent all those documents off to the lender, somebody called an underwriter will look at your full application, including all the documents. Now, the underwriter is a real-life human being who assesses your application and makes sure that you fit all of the criteria for that particular mortgage lender. Now, more often than not, they'll look at all the documents you've sent in and then they'll say, oh, well, in addition to this, we need extra bits and pieces. So that's quite normal. So if you've sent everything off and you're expecting everything to run smoothly, it's perfectly normal part of the process to be asked for some extra information as well, so do be prepared for that. One thing I will say as well is that it's a good idea for you to be around during your mortgage application process, because let's say for example you've booked a holiday to the Bahamas and you go off there for 2 weeks whilst your mortgage application is going, but somebody in underwriting has come back and queried something, you aren't around to actually go and get that thing, so it's actually going to delay your application process if you're away. So it's always a good idea to try and do these things and book your holiday after you've moved. Once the underwriter has all the information they need, they'll then instruct the valuation. Now, this might be the very first thing that you pay for during this mortgage application process. Certainly won't be the last thing you pay for, but it certainly might be one of the first things you pay for. And although you pay for the valuer to go out, it's actually the valuer that's working on behalf of the mortgage lender, not necessarily on behalf of you. So just be aware of that. Now, the valuer will normally organise the keys directly with your estate agent, and they'll pop round and they'll have a look at the property and they'll assess everything and they'll put together a document document called a valuation report. The valuation report details exactly what the property is, so whether it's a flat house, bungalow, plus all the key details including what rooms it has, whether it's got any outbuildings, a garden, driveway, what type of construction it is, so normally that would be brick and tile, and they'll also put the value of the property, which if you're buying is normally the price that you're buying it for, and they'll also put a value for rebuild, which is what you'll need when you apply for your buildings insurance on the property. The valuation report then goes back to the underwriter who needs to approve it before then issuing your mortgage offer. When your mortgage offer comes through, your broker then has to send you a document called a suitability letter, which is in line with FCA rules on regulated mortgages. The suitability letter will explain why the broker has chosen that particular mortgage product for you and why the lender was the best one for your circumstances. Make sure that you read the suitability letter and that you agree with what the broker says. Once you have your mortgage offer document in your hands, you know for certain that your finance is organised, and the rest now is up to your solicitor. Once your solicitor has everything they need and they're satisfied with everything that the seller and the seller's solicitor has given them, they will organise a date for you to exchange contracts. Exchange of contracts is basically the point of no return. You are legally obliged to complete on the property once you exchange contracts. Completion, which is the date that you officially buy and own the property, is normally set for around a week later, although you can have exchange and completion on the same day, which I've done several times before because I'm impatient, or you could do what's called a delayed completion, which is where you exchange contracts and then you actually complete a few weeks or even months later on. Now there are a couple of other things to note about residential mortgages. Number one is that you can only have one residential mortgage per married couple. So if you are a married couple, you are seen as being one family unit, so therefore you only need one main residence because you're living together. But if you're not married and you've got two separate houses, so each of you technically lives in a different house, you can still have two residential mortgages, one each. But the moment you combine and become married, then you can only have one residential mortgage. So let's say, for example, that you know you're getting married and you're going to be moving into one house that is going to be your main residence, then it's a good idea, if you want to keep the other property that you've just moved out of, you can change that over to a buy-to-let, for example, or a holiday home if you want to keep it. And that way you're not in breach of any mortgage terms that you might have. The second thing to mention is that residential mortgages may be either interest only or repayment. With an interest only mortgage, you will still owe the mortgage lender the full amount of the mortgage at the end of the mortgage term, because all you're doing with an interest only mortgage is paying the interest every single month. You're not actually repaying any of the capital of the property. With a repayment mortgage, not only do you pay the interest every month, but you do actually also pay a portion of the capital. So by the time that your mortgage finishes at the end of the mortgage term, you won't owe the mortgage lender any money. Your mortgage will be paid off completely. Now 9 times out of 10 on your main residence, your residential mortgage, you will be getting a repayment mortgage, because this satisfies both the lender and the FCA that eventually your mortgage will be paid off, and that's the most responsible way to lend. So I do hope you found this video useful, guys. Do give me a thumbs up just underneath here if you have found it helpful. Do watch these 2 videos up next because they will definitely help you with your wealth journey, and subscribe to the channel if you haven't done that already as well. Now I wish you all the very best with your move. I really do hope it goes smoothly for you, and in the meantime guys, do stay safe and I'll see you in the next one.